Responsible financing is very central to Equity Bank. At the moment, Equity is celebrating uh, being named the Bank of the Year in financial reporting by the African Investor. So when you acquire such status, it shows the commitment to reporting. At the same time, Equity is more focused on customer protection because the sustainability of our business model is based on continued support by our customers. So in our banking halls, we display all the charges. At the same time, we have what we call the customer's charter on what our promise is to the customer. What are their rights, and then consequently, what are their obligations? And so that is upfront. When it comes to transactions, particularly borrowing, all of them are documented with a clear agreement which stipulates all the charges. In terms of handling, Equity emphasizes on the concept of respect, mutual respect, dignity, fairness, and justice in treatment of the customer. So we practice to our best the concept of equity. 60% of the population of Kenya is below the age of 20 years, and that shows that it's youthful population. When you look at the future of a country, it's dependent on the investments that have been placed onto the youth. We as Equity Bank are committed to playing our role in ensuring the future of Kenya, and basically Africa is better by focusing and investing significantly on the youth. We have a number of programs, the first one being sponsorship of the very gifted children to university education. And so far, we have sponsored 800 Kenyan children, 400 young girls, and 400 young boys. The second one is a credit component that targets the youth. And this is a credit that is based purely on a group model because most of the youth have no collateral. At the same time, we have cash flow based Imala Daima product that is targeted to the youth to help them, based on cash flow, to become young investors and can build the competencies and skills as they move on. We are seeing very good response from the youth, a very good quality loan portfolio with a default rate of less than 3%, suggesting that the youth, if harnessed, their energy and effort, passion, and intellect can be a basis of building an economy. Ecuador, because of its sheer size, have had significant impact in the banking landscape in Kenya. It has redefined the banking rules with its market share of 52% of all bank accounts in the country. It is influencing how banking is being done. And we are seeing banks following equity closely, both in product development, pricing of products, and delivery mechanisms. So I would say the biggest beneficiaries of equity's impact have been the customers who have seen lower prices or lower cost to access to banking services and more convenience as banks try to position themselves to become attractive and to meet the challenge of the rules that have been redefined by Equity Bank. With the growth, the organization is becoming more complex to manage, more complex to learn. The processes and procedures are becoming more complex. So that's an area that we are adapting ourselves. The second area of challenge is the heavy dependence on ICT. With 3.4 million customers, Equity is heavily depending on the IT platform to deliver, and consequently, that dependence have changed our risk matrix, and we see the need to enhance our risk management and mitigation with a more focus on electronic and ICT area. Of course, the other area that will pose a challenge is the regional expansion. We're now moving from a one country organization. We're already in 3 countries. So, again, managing a multi country organization is a complex process. And we believe that is another area that we need to learn so as to avoid the challenges that may come with it. And lastly, is managing 4,500 employees. Maintaining the organizational culture poses a challenge, but being aware, we are endeavored to ensure that we don't lose the grip on what has been driving equity in terms of organizational culture. Looking into the future, Equity has focused on a strategy of commoditizing the current business model so as to roll it throughout the African continent. The first effort has been done by acquisition of UML in Uganda and converting it into Equity Bank. And that has been one of the tests of rolling out through acquisition. The second one is a greenfield in southern Sudan, which again is focused on testing which will be the best model of rolling the bank throughout the African continent. We have seen most of the parameters have now been adjusted to accommodate the various changes that play into different countries across the African continent.